and welcome back to Dividend Growth UK. I'm David. This channel is not financial advice and I am not a qualified financial advisor. Everything here reflects what I do with my own money, what I intend to do and what I have done. It is not a recommendation for anyone else. Investments can go down as well as up and your capital is at risk. Always do your own research, and for regulated advice please consult a qualified IFA. Now with that said, let's crack on with this episode. Standard Life, my biggest ISA holding, £958 twice a year in dividends, and I am putting £400 a month more in every single month. In this episode, I want to walk through exactly why I bought it, what the investment case looks like today, and why I keep adding to it month after month. So what is Standard Life? Ticker symbol SDLF is one of the UK's largest insurance savings businesses. It was previously known as Phoenix Group, one of the biggest life insurance consolidators in Europe, before rebranding to Standard Life to reflect its broader ambitions in the savings and retirement market. The business collects premiums, manages billions in assets for policyholders, and generates significant cash flow from its back book of insurance policies. That cash flow is what funds the dividend, and the dividend is why I am here. So I first bought on the 19th of February 2025. I had read an article about the company, liked what I saw, and it passed what I would call the Buffett test. A business I could understand, generating consistent cash with a durable income stream and a management team committed to the dividend. I also have a preference for insurance stocks over banking stocks, and that preference is deliberate. I think there is a structural problem brewing in commercial property. Post-COVID, office occupancy has not recovered pre-pandemic levels in most cities, and a lot of these offices are sitting significantly underutilised. I have heard one commentator describe what is coming as the office building bust, and I think they have a point. Banks have significant exposure to commercial property loans. If that market comes under sustained pressure, the banks are in the firing line. Insurance companies like Standard Life have a very different balance sheet profile. That distinction matters to me when I am choosing where to put long-term capital. So let me put the position on the table. I hold 3,982 shares at an average price of £6.05. The share price at the time of recording this is £7.78, and that puts the position up 28%, a capital gain of £6,836 on the original investment. The last semi-annular dividend was £958. Annualised, that is approaching £1,900 a year from this one position alone. Inside the ISA, completely tax-free. Since buying in February 2025, I've received £2,226 dividends. That represents a 10.5% return on my investment in income alone, before accounting for the capital gain. So capital gain is up 28%, income return 10% already, and I have only held it since February 2025. I have a £400 a month regular investment set up through Interactive Investor. It goes in on the same day every month automatically into Standard Life. Investment thesis intact. You keep adding. You do not move the money somewhere else chasing something new. You back your conviction with consistent capital. Every £400 that goes in buys more shares. More shares means a higher dividend next time. More dividends mean more income compounding into the ISA. That is the machine working exactly as it should. The original reasons I bought still hold. Cash generation is strong, the dividend is well covered, management has been clear about their commitment to progressive dividend payments. The yield remains attractive and the business fundamentals are solid. Now, no investment is without risk. Standard Life operates in a regulated industry and is subject to changes in regulatory requirements that could affect its capital position. Interest rate movements affect the valuations of its asset book, and as with any large financial institution, there is execution risk in the ongoing transformation of the business. I hold it because I believe the income is durable and the business is well positioned. So Standard Life, 3,982 shares, £958 dividend payment on a semi-annular basis, up 28%, £400 going in every month, my biggest ISA position, and one I intend to keep building on for a long time. Now, if you want to open an ISA and invest in positions like this, I use Interactive Investor. The link is in the description. It is where the ISA and the SIP both sit, and I've been on the platform since 2017. So subscribe and follow along, and I'll see you next time. Bye-bye now.